Hey, everybody. Welcome, welcome, welcome. It is Friday Eve. Yes, one of the favorite times of the week. Friday Eve, here I am. I am back here down live on the floor of the CBOE back in the S&P 500 options pit. Sorry, I was out yesterday. That's okay. You had Mike Shore with a great lesson yesterday. Yesterday, I was actually playing in a big golf tournament, the CBOE golf outing here that my sons and I actually won. I did not add anything to the foursome whatsoever. Trust me. I think maybe I hit a couple putts. They definitely carried me, but it was a wonderful, wonderful day with a lot of these traders, brokers, and the like that were out there. All right, David, thank you. Thank you for the like. Everybody, let's get some smashes early today. I don't want to be begging you later on today for any more likes or smashes. So what's going on here? I mean, pretty big move in the market intraday here today. I think S&Ps were up a high of about 30 points. Right now we're down about 11 points, but there is not a lot of activity at all. Volume is pretty light. As you can maybe see and or hear behind me here, there is not a lot going on whatsoever. But that is all right. There's always opportunities. We know that. And now it is time to get into the weeds on today. So, again, let's smash, like, subscribe, all that good stuff. Please help us out. Help us out so we can continue to do this on a daily basis. All right. Today we are going to we're going to follow up a little bit on what Mike Shore was talking about yesterday with volume profiles, and I think what we're going to start doing is hitting on some of the technical indicators that we use. And Mike uses ones that I don't use. I use ones that Mike doesn't use. Charlie uses some that we don't use. Oh, there's a little bit of a dip in the S&P there, down about 6 points in one tick. That's kind of weird. But I think what must have happened is, and I said this before I came down here, I said, watch for the 30-year bond auction, which was right at noon as we were going on air. And I'm looking for some highlights. And that is what must have just hit the market, is what I'm guessing. I haven't seen any results yet, but apparently I'm looking for any headlines here. I don't see it yet, but as soon as I find something, my guess is the bond auction was probably not well received, meaning that that is pushing rates up higher. So we will follow that. Sorry guys, I'm not distracted. I'm actually trying to get news on what. Oh, there it is. 30-year bonds draw 481 versus 479. So it's hitting the tape right now. Let me try and dissect that for everybody. Yeah. So what that means is government sells these securities. Okay. This has been a huge week. Yesterday was the 10-year. Today they had a 30-year bond auction. And if there is big demand, okay, if there is big demand for the auction, that means prices would be higher and rates would be lower. Here, what I'm just seeing, and it's just a headline right now, and that's certainly what was reflected in the S&Ps because rates must be moving up. There was not such a big demand for the 30-year bonds. So what happens is, if you think about it, if there's not a big demand for something and somebody wants to sell something, what do you have to do? You got to lower your price, right? You got to lower your price until the buyers step in. So essentially, that's what the government had to do in this auction. They had to lower the price of the bonds, which means that what? Rates are moving higher. So that had to be what hit the market. And again, those of you in the op vol room, I talked about that right before I came down to the floor here, that we had to watch that. So we're off about 11 points in the S&Ps since we started here. There's still not a lot of activity back here, but let's see if that moderates at all. But rates have been moving down nicely over the last week, 10 days or so. We saw the 10-year actually go down below 4.2%. We're probably seeing them tick up right now. We'll check back into the bond market before we leave here today. But as I was saying before, we're going to start doing more and more of market minds on technical analysis. So today, moving averages. Okay, what are moving averages? Just hang with me here. I'm sure most of you know, but we're going to take a deep dive here. Okay, moving averages are a just a really common way, and I think we probably all use some set of moving averages to look at and process price analysis. It is typically one of the first and can be one of the most widely used and simple indicators that traders have on their charts. And we use that in conjunction with other indicators, but what it does is it gives us trend. It shows us trend. It shows us an average price over a particular period of time. That period of time can be 10 days, 20 days, 50, 100, 200, whatever kind of timeline that you want. So you can calculate it for any period of time you want. And again, what that was actually not a trade. I don't know if you guys heard all the noise back there. That was not a trade. Somebody must have made a joke or something there. But um, we use moving averages, and they are very, very important indicators to help us define support and resistance, possible breakouts. Okay, so when we see a price coming down to a moving average line or up to a moving average line, okay, that can be a very, very significant indicator for buy and sell areas. So, how do we calculate moving averages? Well, the two that we look at are simple moving averages and exponential moving averages. And we're going to go into what they both are here in a moment. Okay. And there are a number of ways to calculate, and each methodology is just a little bit different. Okay. But we're going to see simple exponential on the charts. In fact, I know on, I think pretty much any platform, and we use Thinkorswim. I'm going to show it to you in a moment. You can use either the simple or exponential. Okay. And it really depends on your style of trade and what you are trading to really hone in on which of those you want to use. For instance, OpVol, Op Essentials, my trading, because we're not day trading, we're not in and out, we're more or less swing trading. The positions last for, a number of days. Simple moving average for us is more reliable. However, you get to what Mike and Charlie do if they're looking for, quick trades in and out, we're using or they're using exponential. Ooh, hang on. Six. This is great, guys. They're quoting an S&P Iron Condor. Sorry to go off on the side here. Tomorrow's expiration 6,200, 6,100, 63.75, 64.75. So 100 points wide. Iron Condor. So see what we trade actually is happening here in the pits. These are actual things that are happening in the pits. If I can hear a market on that, I will let everybody know that. But 100 points there. So anyway, let's talk about simple moving average here. Simple moving average, SMA. Okay, what is the SMA? Okay. It really is the most common, the most basic of the moving averages. Okay. And what it does, it calculates an average price of a security. Wow. That traded just so you guys know, that traded $90. That one. That traded $90, that Iron Condor. Okay. We can maybe price that out later on or we can look at it towards the end today. 6200, 6100, 63.75, 64.75. Just traded $90. Tomorrow's expiration. Okay, back to simple moving average here. Okay, easy to calculate. This one is literally you take your period of time, whether you want 10-day, 20, 50, 100, whatever it is, you take that, divide by the number of days. Now, when I say you take that period of time, what you're doing is adding up pricing from each day. Now, you can use the opening, you can use a midday pricing. Most people will look at using the closing prices of a day. Okay. And all the charts that you have, whether you're on Thinkorswim, E-Trade, Fidelity, whatever it is, those are going to use closing prices. So let's say you want to look at the 20-day moving average. You take the last 20 days closing prices, divide it by 20, boom, that gives you your simple, which is, why it's simple moving average. Okay. Now, again, simple moving average, okay, is definitely less responsive to sudden changes in the marketplace or sudden changes in a particular stock because the average is equally weighted amongst the time period you're looking at. Okay. Does that make sense for everybody? Before we move on to exponential or talk, a little bit more, I want to make sure that everybody understands it. I mean, this is really simple. Literally, you want 10-day, you take the last 10 days, divide it by 10, boom, you got your simple moving average. Okay, now exponential moving average. Don't get scared at the exponential because now we got to talk a little math. Okay, that's also known as the EMA. SMA for simple moving average, EMA for exponential. Before we do that, let's go right to Thor's word of the day here. We've got Thor's word of the day. Just move. Keep it simple here. Keep it really simple today. Nothing fancy. So let's get your words up there. Let's get them on the wheel. That iron condor that traded is literally the only trade that I have heard so far since I have been standing here. S&Ps are on their low point of the day. They're down 23 and change right now. What else? I'm still looking to see what rates are doing here as they cross the tape. I know the Dow is down almost 400 points. NASDAQ is what was up pretty big earlier is now only up about 20 points. Bitcoin's up a little over 1%. Ethereum is up about the same. And come on, will you tick to the bond market up here, please? I'm just watching this big ticker up here, trying to get that to you before we go into the EMA. The VIX is up a tad. It had been lower down at 1598. It is now 1741. And I literally am going to give this one more pass through on the data coming up on the big screen here. Looking for rates in the bond market and otherwise, nope. Okay, we'll come back to it. All right, guys. So exponential moving average. Yeah, that looks like a very, very scary formula. Really scary formula. But let me just say something. Just like when we talk about the Black-Scholes option pricing model, okay? And it is a very detailed algorithmic mathematical formula. You don't need to know the formula. You need to know, or you should know, the pieces that make the formula work. You don't need to know the formula. Well, EMA is pretty similar here. Okay. EMA, and I'll give you the formula to figure it out. Most people don't even want to think about it. And I'll give you some shortcuts to it. But what the exponential moving average does, it places an emphasis on the most recent data, the most recent price moves. Okay. So it exponentially, there's the buzzword for EMA, exponentially decreases the weighting of the further out prices. So for instance, we want to take the EMA on a 20-day moving average. What happened yesterday will be weighted significantly more than what happened 20 days ago. Take the 200-day, same pattern. Okay. And why is that special? Why is that different? Why do people use that? Okay. Well, the EMA is going to have a much more significant data for you if you are looking for real quick price changes. So if you are day trading, if you are in and out and in and out, and you have very, very short-term timeline, you would want to use the EMA. Okay. The weighting ensures that the most recent data, okay, has a larger impact on the average. Does that make sense for everybody? Okay. Now, what I will tell you is, and there is the formula up here, and I'll show you another one as well. Let's say you're using the 10-day moving average. Just going to try and keep it really simple, not to confuse simple and exponential, but if you're using a 10-day moving average, day number one, which would be yesterday's data, okay, rather than accounting for 10%, right, of the average, because in a simple moving average, if you're looking at 10 days, okay, every single day is going to be an equal weighted 10%. However, the exponential, if you're using a 10-day, yesterday's data is 18.18. That is the percent multiplier. And then from there, that weighting goes down, 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 down. It's kind of like if you think of your theta graph, it's the inverse theta graph, right? Theta graph works the more time you have, right? The closer and closer and closer you get to expiration, the more that theta kicks in. Here, it's kind of the opposite. Okay, so the further you go out in time, the less importance, the less weight that price has. Okay, does that make sense to everybody? Okay, great. So here is the actual calculation. And if you want to copy this, you can find it yourself too. Okay, but what it does is take the price. Uh-oh, Mike, Mike, what happened here? Hang on, guys. Hang on, we got a connection issue. We got this just everybody still see me? Are we good to go here? Because I know we just had a little glitch there. Okay. It's back now, yeah. Okay. Okay, phew. That just scared me. That just scared me. Okay. So for the EMA, take your price. Okay. K, as you can see in here, that's really the multiplier, or that is the factor. So if you look at K, it's 2 divided by n plus 1. Okay, you can follow along here, and then you can see that you're taking Y, which stands for yesterday, and then every subsequent day further out has less and less and less weighting. Okay, really suffice to say, all you need to know is short term. If you're a really short term trader, probably going to use EMAs. If you're more of a swing trader, and when I say short term, we're really talking day trades. If you're swing trading or holding trades for a number of days like we typically do, my go-to is the SMA. So let's take a quick comparison here. And I used HIMS. You should all see this chart on the screen, which is for HIMS. Okay. Now, I can also see you, but you're not moving. Mike, you see that? I don't know what you mean by that, Pete. If you can see me, is the camera off? There we go. That's what. Thank you, Pete. That's what flicked before. So you can see the charts, everybody, though. You don't need to see me, but you can see the charts. Is that okay? As long as you can see the charts, that is fine. Looks like your camera was unplugged, is what it says. Okay. Anyway, as long as you can still hear me and you can see the charts, that's good to go. You definitely don't need to see me. Hey, Steve, I'll shoot an email Monday. Can I do a Fox Business hit 2:00?
We already have a 2:00 Fox business hit scheduled with Mike Palmer. So if it's with two different things, we can fit it in.
I wonder if it is the same hit.
Might want to check.
Yeah, I definitely will.
If it's for a different version of Fox, we can still accommodate. But
Okay. I will let you know. That's weird. Okay. Just said something to you. All right, I'm gonna check as soon as I get back upstairs. Awesome. Awesome. Thank you. Thank you. Thank you. Okay, everybody. Sorry. Here we go. So on this chart here, I've got 4 moving averages. So as you know, those that tune into my rooms, my red line on my charts right here is the 50-day simple moving average, and my blue line right here is the 200-day. So what I've overlapped or what I've added on here, the kind of lighter red or pinkish line, that is the 50-day exponential. And the lighter blue, sky blue, powder blue, whatever you want to call that, that is the 200-day exponential. So you can compare, you can pull that up on any chart you want. Okay, market came back a little bit here. Okay, you can pull that up on any chart you want to see the differences. Sometimes there's going to be a very small difference. Other times you could see a major difference. Okay, still using the same period of time, just a different calculation on how we get there. Everybody clear with that? Anybody have any questions whatsoever? Mike, you have the link for Charlie tonight. Yeah, I put it in that's Mark and mine Slack. So tonight, everybody, Charlie Moon, who you probably all know, Charlie, he will be live tonight, 7:00 Central, 8:00 Eastern. Charlie is going to explain his AI trading platform, which is absolutely just killing it. So if anybody's interested in listening to Charlie this evening, 7:00. Yeah, Kevin, we all know and love Charlie, right? Hard not to love him. So 7:00 Central, 8:00 Eastern. I guess that would be 5:00 Pacific. Charlie will be live tonight. Just posted up a link in the chat. Okay, last call here, guys. Last call. You got about 30 seconds to get this in here. So what I was talking to the CBOE producers were actually over here just now when I was talking off to the side. I'm scheduled to do a Fox Business hit here on Monday, but apparently they already have something booked. So I have to find out whether I'm doing it with someone else down here or what the deal is. All right. What does the distance between exponential and simple average tell about extended prices? Well, again, when you say extended prices, are you talking about time, or are you talking about whether a price is maybe overextended from an RSI standpoint? What exactly are you referring to? Oh, hang on. Are we using now? Hang on. Yeah. We did win yesterday. We were actually in a sorry everybody. We were in a no, it's all good. We were in a playoff. We tied with Billy O'Keefe's group at 13 under, and I guess the way they did it was what was the better score on the last two holes, and we were birdie birdie, they were par birdie. So it was fun. Great day. Yep. Great time. Yeah. And it was awesome outside. Yeah. Good. Cool. Sorry, guys. That was one of the brokers here asking me about the golf outing yesterday. Okay, so we got move. We're out with the wheel is closed. The wheel is closed. I'm going to ask everybody here, what other technical indicators? What other technical indicators do you guys want us to talk about? And then back to the question of the distance. They're both okay, whether you use exponential or simple, they're both going to be reflective of showing us where support and resistance is or where a price reversal. It's just a matter of timing. It's just a matter of timing. Okay, I've got to figure this out with Fox Business. I'm waiting for the wheel here. CBOE producers. Just told, sorry, I like talking to myself, everybody. All right, we good on the wheel, Mike? Okay, thank you. All right. Got it. Okay. Bollinger Bands. Okay. Linear regression. SATI. Got it. Okay. I'm just looking up at the market here because we were rallying back and then just took a leg lower. So VWAP, perfect. We will accomplish all of those. Let's get the wheel in here, folks. All righty. Sorry for the hiccups today, everybody. Let's get this right now. There we go. We are spinning and turning and getting busy. And today's winner would be Peter RJ. It looks like it will. Are you in the house? RJ, are you in the house? Excellent. Beautiful. Beautiful, RJ. All right. We'll post it up here, but there it is. You can send an email to me at prosperswag@prospertrading.com. Send me your mailing address, size swag, all that good stuff. I am going to check out of here right now. I got to run back upstairs to the office because I have an interview. One I've talked about before that I do every week. It is on There we go. Now it's picking up as the market is on its low here. RFD TV, you can find it on cable, satellite, whatever. I will be on there in about 10 minutes. So have a great day, everybody, and we will see you tomorrow.